Big oil splurges on investors, spends less on searching. As giant oil companies like Exxon, Mobil, ConocoPhillips get set to report what will most likely be another round of big quarterly profits. So, just where is all that money going? The oil companies insist or say they're trying to find new oil that might possibly help bring down gas prices, but probably not, huh? But the money they spend on exploration is nothing compared with what they're spending on stock buybacks and dividends, buying back their own stock rather quickly. It's very good news for shareholders, though, including mutual funds and retirement plans for millions of Americans, but no help whatsoever to drivers making drastic cutbacks to offset the high cost of fuel, gasoline, diesel, rapidly rising. The 5 biggest international oil companies put about 55% of the cash they made from their businesses into stock buybacks and dividends last year, up from 30% in 2000 and just 1% in 1993, according to Rice University's James A. Baker III Institute for Public Policy. That tells you quite a bit of the story right there, or at least part of the story. They're spending 54% more than they were in 1993 into stock buybacks and dividends. Well, yes, that tells part of the story. The percentage they spend to find new deposits of fossil fuels has remained flat for years, in the mid-single digits. Not a very high number, in other words. You would think, well, no. The issue has become more sensitive as lawmakers and Americans frustrated by high gas prices have expressed growing concern over new reports of even higher oil industry profits. ConocoPhillips is scheduled to kick off the latest round of big oil earnings reports this week. Oil prices, theoretically, are set on the open market, not by the oil industry. But that hasn't stopped public protests, a series of congressional grillings for top oil executives, and a failed attempt by lawmakers to slap big oil with a windfall profits tax. For instance, in the first 3 months of this year, Exxon Mobil Corporation, the world's biggest publicly traded oil company, put out $8.8 billion on stock buybacks alone, compared with $5.5 billion on exploration and other capital projects. And ConocoPhillips has already told investors that stock buybacks for April to June of this year will come to approximately $2.5 billion, 9 times what it spent on exploration. Stock buybacks are common throughout corporate America, not just for the big oil companies. They shrink the amount of stock on the open market, essentially increasing its value and giving individual shareholders a bigger stake in the company. It's about making money. A lot of money. But some critics say big oil focuses too much on boosting stock prices in an industry that sometimes ties executive pay to stock price, and in focusing on buybacks and dividends over exploring for new oil. Many critics say oil companies are not helping us. They're not helping to bring the price down and jeopardize its already dwindling share of world supply. If you're not spending your money finding and developing any new oil, then there is no new oil, said an energy expert at Rice University who studied spending patterns of the major oil companies. Investor-owned companies like ExxonMobil and Chevron hold less than 10% of global oil and gas reserves, way down from past decades. And finding any new oil has become harder and harder and more expensive than ever before. In other words, the oil companies, they're not too interested in finding any more oil. Not anytime soon, not too fast. So you can increase you can say you can drill anywhere you want. Off the coast, anywhere in the United States. It doesn't really matter if it takes a long time to get all that set up. Drilling rigs, no, they're just not, it takes a while to get them going, and they're very expensive. There's more to that, of course, anyway. State-run oil companies, like those in Saudi Arabia and Venezuela, control about 80% of oil reserves, and at today's prices, it's not very surprising at all. But they're keeping a tight grip on what they have. They're going to get really rich. They already are. A huge transfer of wealth from America to the countries like that. It's not going to hold, of course. It's not going to work. Not long term. And scarce equipment and hard to find labor also pose even more problems. No one questions that the big oil companies are rolling in cash. They have money. They're making money, yes. The cash the biggest oil companies bring in from running their businesses or operating cash flow is 4 times what it was in the early 1990s. And then yet, there's some refineries that aren't making money or that are starting to lose money. There's a lot of holes in this oil thing. Peak oil, that's a bad one. And it is coming true. It has begun. So, what should big oil do? The companies say they're doing what they can to find more fossil fuels around the world. But the easy oil, this is the key, but the easy oil is all gone. It costs more and more to get the oil out of the ground. And that's the bottom line, which in turn increases the price of petroleum or the oil. That's still a vicious circle. It's a very vicious circle. A downward spiral. Always costing more, no matter what they do. That's what petroleum's about. Now, for sure. Anyway, exploring these days may mean expensive projects and thousands of feet of water in the Gulf of Mexico. There's drilling rigs that have moorings. The moorings that attach it to the bottom of the ocean. Or it can be as big as Houston. The city of Houston. That's the size of them all. Anyway, and they're huge. They cost a lot of money for them drilling platforms. Anyway, these are more signs, and there are many of them, of the end times, transition days. Yes, many signs.